Chair, how sure are we with this credit movement schedule payment plan, which is a one paper without an attached schedule, to indicate the entities that have been paid, who are these, whether there is payment of multi-year projects that is ongoing, and on the recurrent bills being paid, does it resolve the aspect of unresolved prior year matters where this matter was disclosed? So, Governor, that would be my question one. Question two, Chair, even if you look at note 32 and note 32 and note 40, they are not speaking to each other. It's like Jesus Christ and the Satan. So my question is, this astronomical increase, Governor, now, Chair, I don't know, maybe you'll guide me with this. This growth of year under 1 year in segregation and aging analysis is 335,126,950. So, Governor, which one should we take? Is it on note number 40 or 504,314,600? I don't know which number will work with, Chair. I don't know, maybe you'll guide. So why that substantial growth within 1 year? Because, Chair, it can go back to the manufacture of 278 million that was manufactured in the first issue. Because this movement of pending bills, you know, this payment, there is an increment. And Governor, in your Annex 3, you have indicated that as of 2026, your pending bill is growing. It is now 993,223,845.95. So my question number two, Governor, can you give us the nexus of this astronomical growth in the global view of the pending bill? And this year one, because it's 48% as per the analysis, aging analysis chart that has been provided in note number 32, and also in note 40. And the growth, of course, of over 3 years, 2 to 3 years, 1 year. Give us the perspective, because we know pending bill is a very sensitive issue, Chair. You know, counties globally, the 47 counties, Chair, they owe our contractors, suppliers, and servicemen and women almost over 180 billion. So why this astronomical growth in the global pending bill that you have, or trade payables? And what is the nexus between note number 32 in the growth of 335 million and 504 million between note number 32 and number 40? So which one should we take it home, Chair? I yield back.
Thank you.
So that,
Senator Marum?
Yeah, so that maybe the Governor can answer to both. I've looked at your Annex 3, and I've seen a letter to the Control of Budget dated 23rd October 2025. Please guide us how this payment plan would lead us to paying 782 million, because it's a paper that you need guidance for us to follow. This document, that the one that you're referring to as payment plan, forwarded to the Control of Budget, how would it guide us to how you will pay 782,535,628 from this plan? Please just guide us.
Okay, Governor.
Thank you. Through the Governor, Chair, is that we filed this document to the Control of Budget as at 23rd October 2025. In filing, the advice that we have from the Control of Budget is that it is prudent to start paying from the oldest debts first, going to the newest. At this point, by the time we were talking of 23rd October, we had already, the pending bills had increased from the 782, which was as at end of the financial year, which was June, to 992 million, which was around the same October. So the filing was as at current period as that October. So when you see the schedule attached with the letter, it requires that we show per department what is owed. So you can see the 13 entities showing that in quarter one, this is the amount that we paid. Quarter two, this is the amount to be paid. So the 226 million was quarter one, all the way to quarter four. for development and also for recurrent Q1 to Q4. So the requirement is for both recurrent and development, you show different schedules. Every time before requisition, we then are required to confirm that we adhered to what we wrote and committed ourselves to, and that has always been the basis of the approval of the requisitions. So in essence, then the 992, the 782 is inside the 992 million. Thank you, Chair.
Sorry, Chair. Where did you get 992? I have 993. Or this is another document I'm having. The one you are having, the creditors movement.
You see, members, one thing we must agree on is that if the financial statements are not accurate, then we are not going to make any headway in this conversation. And there have been various admissions by the county of things that they ought to have done that they are going to do, things that they could have done if they had better technologies. And maybe to put it in context, because we also need to go to another issue which will demonstrate the same problem, is that this year, Governor, you had 7.813 billion in terms of receipts. And you have reported here 782 million as trade and other payables. Having looked at other counties, it's not bad. It's not alarming, because there was a county that was here with 4.5 billion as trade and other payables, because that's about 10% of your total receipts. However, we cannot vouch for the authenticity of that number, because as you have admitted, opening balances were not disclosed. As you have admitted, the aging is incorrect. As you have admitted, you did not disclose things like staff payables. It appears as if the county does not understand what it owes suppliers and staff. So I would have been very happy to congratulate you for having some of the lowest debt to revenue ratios. But we can't get there. We can't get there when your own team is the one that is poking holes into the numbers. So, members, I don't know whether you want us to ask questions on the basis of a note and a figure that the entity itself has discredited. Because you have discredited it. That's why you have said you're going to make adjustments in the next financial year. That's why you have said you need better technologies to age. So even if you ask you questions around aging, already you have admitted that you have done the wrong thing. So members, from that perspective, how do we prosecute this matter? Because it, you have incorrectly prepared financial statements.
Chair, and therefore, even the people who prepared financial statements before sign-off, they must have delegated their duty. Because if the governor is alluding to not owning up per se the financial statement, then it goes back to the people who've prepared. And I think this is what we call professional negligence that must be handled. So even as we look at the authenticity of the trade payables, the pending bills, so that Kenyans can understand easily, the people who prepared the financial statement committed a serious cardinal sin by not disclosing the true position. Because if we were not very keen, Governor, we would not have noted these discrepancies that we are noting with financial statements. So, Chair, I think even as we look at OAG looks, because I had also asked the Governor about the schedule of the payment of these 558,097,798 in attaching to show that movement or payment. And also the CC has said that they paid all the pending bills. So we can't see here. So it is hard even to know who was paid then, how much was owed. So, Chair, as you ordered the variance that we noted in 278 million plus, and on this one, the movement between not 32 and not 40. So also the people who prepared, Senator Kata is distracting me. There is the people
by looking at how you handled deposits and prepayments. Because once we get that picture, we'll be able to take a view on whether these are financial statements that can be relied on. So, Auditor General.
Chair, before you go there, maybe one short observation.
Yes.
And this could also be to the auditor and the entity. When we are aging, I'm very uncomfortable with this type of aging. You know, the aging analysis. Trade and other payables under 1 year, then 1 to 2 years, then to 2 to 3 years. I've always been uncomfortable as a student of mathematics. I think maybe moving forward, we might want to just write in terms of months. So when we're aging, we say under 12 months. And then the next row would be maybe 13 months to 24 months. And then the other column would be 25 months maybe to 36 months. Because if you say 1 to 2 years in one row, then 2 to 3 years, how do you then disaggregate the 2 years up here and 2 years down here? You know, so that you can get the figures. I've always had a problem of this type of aging analysis. Maybe we need to change and start using months. Below 12 months, maybe 12 months to 24 months. Then the next one will be 25 months to 36 months. Then maybe over 36 months. Otherwise, this type of stuff, even for mathematics students, this is just wrong. I thought I should make that observation.
Yeah, Auditor, you can always guide the entity, and maybe this should come from National Treasury, really, because they're the ones who issue the, the standards and templates, guidance on aging, so that it is factual. And then I take note of what the CEC was saying, that they are aging manually. I don't know what you mean by aging manually, but I believe this is something that even on Excel can do this. Excel can get you a proper aging, unless you are sitting under a tree and distributing the papers in some grids drawn on the. I don't think that would be happening in Nandi. So there's a problem. There's a problem here, as explained by Senator Maruma. National Treasury offer the right guidance, and then Auditor General ensure that they do as required by the National Treasury.
Thank you, Honorable Chair. The Public Sector Accounting Standard Board is the one that's prescribed how these entries should be treated in the financial statements. And therefore, I would urge the county to adhere to that template, because it is very clear. Like now, for example, the opening balances, they were directed to have the opening balances as at 1st in July 2024. To pick the balances they closed the year with in June 2024 and carry them as the opening balances for that year. So you can see the template is blank. There is nothing that is put there. So I would urge the county to adhere to the template, and they will be able to minimize all these errors. Thank you, Chair.
Okay, that was an observation on the aging practice. Members, I want us to look at the next matter, which is explained in Note 33, so that we can take a view on the accuracy of these financial statements. And you'll still be free to ask questions that cross-cut from Note 32 to Note 33. Auditor General.
Thank you, Chair. I seek your guidance. Which paragraph, Chair?
The deposits and retentions.
Okay. Thank you, Chair. Unsupported fundable deposits and prepayments. The statement of financial position reflects nil balance in respect of refundable deposits and prepayments as disclosed in Note 33 to the financial statements. However, the supporting schedule reflects Kenya shillings 62,967,159 Kenya shillings, resulting in an reconciled variance of Kenya shillings 62,967,159 Kenya shillings. In addition, it was revealed that the county executive operated deposits and retention bank account at the Central Bank of Kenya.
Fact that a significant portion of the retention monies was reported as part of the closing balances in the county revenue fund. A prior year adjustment will be undertaken to rectify this position, and appropriate measures have been instituted to ensure that the matter is accurately addressed going forward. Thank you, Chair.
Auditor General.
Thank you, Chair. The issue is still not addressed. The action proposed by management will be confirmed in the audit of the 2025-2026 financial statements. And the misstatement remains as it was as at 30th June 2025. Thank you, Chair.
Governor, we have the report of the county revenue fund here. Can you show us where that 62 million is accounted for? Yes, proceed.
Thank you, Chair. Through the Governor, is that this, as the explanation goes, is that we've not been, we've been leaving the retention money as part of the CRF balances, but you will not find it broken
take us
down.
to this is a CRF.
Yes.
This is a CRF, because today's meeting was to look at the three.
Yes.
So you have made reference to the CRF, and you are saying a significant portion of the retention monies was reported as part of the closing balances in the CRF account. This is a CRF report. Demonstrate to us where the 62 million is.
Yes, Chair. I'd wish to just make an explanation through the Governor on that.
Just make reference to the CRF, because the response makes reference to the CRF, so that we are dealing with facts. The Governor said it was reported in the CRF. If we find it in the CRF, well and good. We go to the next question.
Thank you, Chair. It's reported in the CRF, but not as a standalone figure of retentions. We've not separated in the CRF.
Where, in which line, on which page is it included?
So basically, Chair, any money that has gone through the CRF would then mean that it will be translated and paid to suppliers. Any balance that is in the CRF would include the retentions that really will be transmitted.
Okay, what is that global balance that includes the 62? You see, Governor, I think you must be concerned. It appears as if someone wrote for you this response. Of course, you'd rely on your technical people to do this response, which I understand. But they must also write responses that make sense. If you tell us the money was accounted for in the county revenue fund, this is a statement of the county revenue fund. Just show the Governor so that the Governor can show us where the 62 million is. Because in the report of the Auditor General, the Auditor General says you retained 62 million, but there was zero in the account, which means the 62 million was stolen. But if there's another explanation, show us.
Okay, Chair. So this has been the trend of activity. Initially, we used to maintain a retention account with the commercial bank. Courtesy of the advice from the Auditor General, it was advised that that has to be maintained with CBK. So we closed the retention account at the commercial bank, paid out all the retention monies. We opened a CBK special purpose account for purposes of retaining and transferring the money. The practice has been, since we opened, what ought to happen is that as we pay the supplier, we then transfer the retention money to the retention account. But we've had a mapping issue. So effectively, for the suppliers that we've been able to retain, we've only paid them 90%. 10% still remains unpaid. As soon as then we're able to fix the mapping, from our balances, what we receive from Exchequer, we'll still have to earmark and put it aside and transfer the whole amount, including the arrears, to that retention account so that we're able to pay.
I'm sorry, Governor. This committee is driven by facts. If there's a fact in the CRF, please point it out. If it's not there, then let's go to note 33. Because I thought we'd get some salvation there, but let's go to note 33. So, Governor, what have you reported as customer deposits, prepayments, and total deposits in your financial statements? customer deposits,
It's not in, it's nil.
payments,
Nil.
other deposits,
Nil.
total deposits.
Nil.
Yet the Auditor General finds that there's 62 million that ought to be retained for suppliers. So where did the money go to if it was not reported?
62 million. Unless whoever prepared, even I've looked at the CRF account, financial statements that the governor is trying to allude in, it is not traceable. Because even if it was in a global figure, it should have been reflected in the CRF document or the statement of the OAG. So, Chair, I think looking at all this, since there is no movement, and you know they say numbers don't lie, other things can lie, it is hard to trace where this retention money of 62 million is. And it points back to the initial disclosure of financial statements.
Okay, I want to hear from the National Treasury because they've given us guidance on this matter in the past.
Thank you, Honorable Chair. Probably begin by educating how the deposit money is handled. Because at the point of pay, the contractor or the supplier, if they are entitled to that deposit, probably the way it was defined in the contract, that is at that point of payment, that is when you fill in the IFMIS the percentage that should pay, and then you pay the contractor, the contractor's account, and the 10% retention you pay to the deposit account. Then update the deposit rate so that when that contractor will come seeking for their money, because actually it's not the account is money for that contractor, you'll be able to pay using the range of kept because it is stating we have obtained this amount of money from XYZ. But now the way the situation is here is like there is no traceability, there is no visibility. I'm even wondering when that contractor will come, how to be able to know what they have obtained for that contractor sales.
You have heard the concerns from members of the National Treasury. You have correctly read your statement. There is zero, but the auditor has found this. How do we? What is your view? I know in the 11th Parliament where we do in the Senate. So assuming you are sitting where I'm sitting, what would you make of this?
I think, Chair, I would probably be exactly in the same position where you are, where it's clear, you are not able to make that clarity. But I think the explanation that has been given by our CEC explains that when we opened the retention account at the central bank, we had a mapping issue. It wasn't, we were not able to operationalize the account at that time. But the fact that we did not operationalize that account at that time did not mean that the retention money was, the retention was being retained within the CRF, so that the contractor was being paid is 90%, the 10% retention was, still remained within the county, and when the time comes for the contractor to be paid, pending sorting out the mapping issues in the central bank account, then we just budget for it and the contractor is paid. Of course, it's clear, for every contract, the percentage for retention is known. So it can't be chaos because it's known that this was the amount of the contract. He was paid 90%, 10% is outstanding. So that is really the case. and not just unique on this particular, in this particular case. Even previously, when we had a huge struggle with disbursements, chair, sometimes if you are driven by the reason to pay contractors. If you get whatever amount that you have gotten, and you know this retention might still be needed, even as you put in the account, this retention will be needed in 2, 3 or so months, depending on, you know, the period that will be needed. So if you do not have all the resources at that time, some, you know, cash flow management situation that practically we find ourselves in is you pay the contractor is 90%, as you know, and all the other contractors, sometimes you actually are not able to save enough to directly transfer to the retention account at that particular time. But since you know that this amount will not be needed for the next at least 2 or 3 months, you can still pay the contractors as you wait for the resources to come. And when the resources come, you're able to, you know, set aside that amount. It may not be the right thing to do, but sometimes it's a practical way of dealing with cash flow challenges that we have had. So, Chair, if you then would give us the opportunity to, together with even the schedule for the 270, because I think there are quite a number of outstanding you know, clarifications that we have to make on this particular audit query and the 2 previous ones. If you then can give us, or, you know, direct us to work out on this, we can be able to do it.
No. At this point, Governor,
Yeah.
and I think when you explain it for very long, it means that even you are making up words, you know, on the go. Are you satisfied with that explanation, particularly the one on record, the one that you submitted, the one you tabled on record? Is that the explanation that we should take, that we should go back to the County Revenue Fund?
Yes, yes.
But I have shown you the County Revenue Fund statement so that you can show us where the numbers are, and you've not been able to.
On the flip side, Chair, because the schedule of those who are supposed to be paid is there, adding up to 62 million or 9. That schedule is there. But then we are trying to locate the money in the accounts. That money is not there. So then how do you intend to pay if you are to take the governor's explanation? If the suppliers, the contractors come for their deposits, how do you intend to pay? In the current budget, do you have maybe a budget line for this 62 million? Because from the records, it's not there. It's not in the accounts. So how do you intend to pay that?
But also, let's remember that money is retained and money is already approved by the control of budget.
Correct.
Control of budget, is that the case?
Yeah, that is very true.
So you can't come back again with a fresh requisition?
It is in addition what money that is statutorily deducted
Yes.
from the employees and is supposed to be given to pension schemes or any other form of statutory deduction is the money that has already gone out and has been approved by the COP, just like retention money. And that is why I was saying this contractors' money. So when you go and plow it back, either through reallocation or moved that movement, then it is already unprocedural and illegal. So you cannot budget again, Governor, for something that has already been approved by COP. It's already there.
And then again, reallocations can happen in certain circumstances, but there is a procedure. There are some approvals that must be obtained for reallocations. I think we have dealt with some here. You recall, members, the 5 million that was diverted in Vihiga to a housewarming. And I think there was some 10 million that was diverted in Embu to a different exercise. There must be some approvals and some procedures. So, Governor, please tell us, where is this 62 million? Because all these explanations have not addressed the 62 million. It has been requisitioned, the control of budget has approved, the money has come to the county, you are paid less than 62 million, but it is not in the bank account. It is not in the financial statements. Before we conclude that this was stolen, are you able to explain to us with detailed evidence where the 62 million is? Because there's been a lot of prose, a lot of speculation of what may have happened. Let's focus on the 62 million. Do you have a register for retentions and deposits. And even if you have that register totaling to 62 million, where is the cash? That money has already been released by the control of budget. Where is it?
I quite agree with you, because I'm remembering what the treasurer was saying, that you get, if it's a tender for 10 million, you're given the 10 million by the control of budget, then you pay the 90%, the 10% is retained.
It's retained.
So you're given all that money. Unless now you're saying the 10% was really misappropriated. Thank you.
So the money comes. The money comes. They have the money. So the controller will not even accept a fresh requisition for it. So, Governor, where is 62 million owed to suppliers? Let's just now address ourselves to that. Let's not hypothesize that it could be there, it could be there. Let us know, where is this 62 million as retained by the entity? It is not in the bank account. Not reported in note 33 is zero, but in reality, the control of budget has approved positions, out of which 62 million is supposed to pay the service provider, and it is not in the bank. Whose pocket is it in?
Through the Governor Chair, yes, when the control of budget approves the requisition, it's 100%. But at the point of payment at central bank, there'll be payment that goes straight to carrier. There'll be another payment that goes to the contractor, possibly NITA or any other deduction relating to that payment. And then the other payment should be a payment that goes straight to the retention account, which in our case, that is the one that is missing. It then means that no money moves from our CRF to the retention account, simply because of the reasons that I mentioned of the mapping. A good example, Chair, is that recently we needed to pay a retention amount of about 27 million. We made a requisition, but we encountered a challenge where it still wanted to deduct taxes afresh. Yet we know in the original contract, as you rightfully put, is that taxes and all those other deductions that have been made. So that is the challenge we're grappling with. Now, what that means is that the 10% remains unpaid out. It's not that it was wired anywhere.
Where does it go to?
It still remains in the CRF. And since we are making payments, for example, when we receive 500 million, the payments out of CRF will be equivalent to 500 million. Yet in actual sense, assuming we're paying contractors, we should be paying out 450 million and 50 million to the retention. So since the leg of the retention account is missing, as a cash flow management issue, then we end up using everything. But as Governor mentioned, is that for any contractor now who needs to be paid their retention, we have to sort out at the supplementary level. And in this case, the payment is through the COBS, but waiving the deductions because already that processing had been done at the initial level when we did the requisition. So it is a direct payment to transfer our money from our budget to the retention account, noting that we had already met. So that will sort the problem going forward of the historical issues. But then going forward, it then means with the cash flow stabilizing, we'll be able to do that in real time.
See, you can be a good teacher, but a poor problem solver. Where is this 62 million?
Chair, it's lying in the CRF. Whatever money that is left in the CRF is to account for all the unpaid claims.
Why did the PFM require you to establish deposits and retentions account?
Yeah, and why didn't you transfer that money? Because this is just unique for Nandi.
Yeah.
Other counties would have that retention account, but then borrow it and use it for something else and return it. But for you, with the officers, there's a challenge of transferring that 10% to that special purpose account. What is the challenge?
Remember, it's not optional. Your neighboring county of Kericho, part of the charges when the governor was brought to the Senate on impeachment, which we did not consider because it terminated on preliminaries, was misuse of retention and deposits account. It's something significant that it can lead to the impeachment of a governor. And yet the governor is not involved in the day-to-day. It's these officers. No. So, Governor, if you're going to accept this kind of stories, then one day, God forbid, your MCAs come for you for misuse of deposits and retentions, as happened in Kericho, you'll find yourself asking yourself why you didn't ask these questions earlier. There's a reason why that account must be established, and that requirement is in statute and in regulation. It cannot be optional. You can't have your own version of the PFM.
Yeah, and I've had the explanation, Governor, you see, it doesn't handle because, let me repeat it again, retention money is like debt reduction. It is approved by COP. It is money that should be in account. Chair, there is no other explanation. If the governor cannot tell us where 62 million is, then it was eaten, Chair. Because if he cannot be point and say, and the explanation of CCM is explicit, but we are just wondering where is the cash. If a chair, he can point us and say this is the retention account that has 62 million, just the way he was arguing on the employee cost payables, Governor. You say it is nil, but you agree with us that it could not be nil. So the position is very simple. We want to see this 62. And the chair, I've gone through the CRF, what the governor, and I thought the governor would have redacted this statement that he said it is in CRF account. Because, Governor, looking at the financial statement of CRF account, there is nowhere that it indicates that there is where this can be traced to 62 million. Chair, I think you just make a ruling, then we can proceed.
Maybe just to, as you respond, Governor, your officer said that you initially operated a commercial bank account for retentions, and then you advised to open a central bank account. That's a position. And you're saying that sometimes the auto allocation at the point of payment does not work because of the account. Why? And yet here the auditor says that the executive operated deposits and retention bank account at the Central Bank of Kenya with nil balance. So you have the account at Central Bank. So why would you tell us that tax can go, SHA can go, but retentions cannot go? That you don't have an account, and here the auditor confirms you have an account.
Yes, Chair, yes. We opened the account recently with CBK. So what you're dealing with is just the mapping issues at IFMIS level, so that then it goes just the way SHA goes. And
Recently is when?
Confirm.
Is it this year?
Yes,
this month of July.
Within this financial year, I'll confirm exactly.
No, but this was established in the last financial year. So you see, it disqualifies the long arguments that you made, that the money will not go to retentions because of lack of a bank account, and then it goes to general CRF. Please, help us also, give us explanations that can help us understand the process, because you're the technician. Yes. But if you're going to mislead us, I think the governor knows the consequences of giving misleading information to Parliament.
Recently, is it in the financial year 25-26? Because you're dealing with the financial year 24-25. So when is recent?
Recent, Chair, is towards the end of 24-25 financial year. That's about, give it June, thereabouts.
We are being too casual. Governor, we are being too casual on numbers. I wish you could have some sense of seriousness about this, because if you would have asked me to give you time to go and compile your retentions register and to reconcile payments that have been made and to go back and ensure that your account is funded, that would be a better position. But if you try to explain, giving us stories that make no sense, then I think we are taking the Senate casually.
Chair, through the governor, is that whereas in the past we've not been able to make these retentions because of the cash flow issues we've said, our undertaking is that now that we have the retention account, beyond the 62 million, we'll be able then to compute all the amounts that are due for retention in terms of, because we only retain for contracts above 5 million. Then we're able to file and make a provision in the budget so that the entire amount is swept, because the position is that we only paid out 90%. The other 10% went into other payments, as it were, in terms of it is money in the account, so you end up paying next contractor, you pay an extra contractor
But,
instead
officer,
of.
you have not even demonstrated a single contractor who has been paid the 90%. Paying 90% is not a problem. Our concern is that money ring-fenced for its intended purpose? And ring-fencing it means that you've got a certificate from the bank that the 62 million is in there. Whether you pay 90% is neither here nor there, because you can hold that money for 3 years. There's nothing wrong. It's a supplier who should file, isn't it? If the contractor does not file, then you can't pay. So that's not our problem. Whether you paid 90% or 80% or whether you've paid nothing, that's a different problem. Here you have deducted, but the money cannot be traced. That is a problem that we need to address ourselves to.
And
Traceability of the money.
And in Chair, we're dealing with 24-25 financial year. So most of the contractors have completed their defect liability period. So are you paying them after the lapse of that period? From which budget are you paying them in the 25-26 financial year?
Thank you. Through the governor, is that, well, we are lucky that most of our projects are really small projects, 2 million, 4 million, 3 million, which we don't retain. So oftentimes that is 100%. The few projects that then go above or the amount at which we retain, especially the flagship projects, you find they're either still ongoing, or the few that are complete is where now on need basis, or as and when the contractor files the claim, we're now able to now look around and try and get the money. So,
And which are they? Which are those?
the projects.
Because there's no register even for retentions here.
Well, we have that, Chair, we could provide. An example is we did our hospital. The contractor has now filed with us retention.
Do you know the contractors you owe retention? Do you know that?
Yes, we know.
Do you know them?
Yes. We have a list of.
Where is that schedule?
We don't have the list of the retention here because it was
Because
not part of the
that was one way of solving this matter.
Yeah.
To demonstrate that yes, you know the people you owe 62 million.
Yeah.
So even if their money is in CRF, but you know. But you have come with nothing.
Actually, Chair, my reading of this query is that the auditors found from that supporting schedule of 62 million for the people who are owed the deposits. But then the money is not there. I think that schedule must be there. It's there.
Yes, Chair, the schedule is there. We know who owes us. It's only the money.
So how do we conclude about the money? The 62 million? Because if it's in CRF, then it means it will be subjected to another budget cycle, and yet the money had already been approved for release.
And maybe, Chair, I'm trying to get an explanation of CCM. It already says there is an established account towards the end of financial year 24-25. And the issue of cash flows is not an issue. The point I'm trying to make is that we have agreed that this money was budgeted, approved, and released by the COB. So the question, the fact that they can pay does not mean where these 62 million are in cash. And I've seen in note number 21A in your financial statements on executive governor, I cannot see, I have seen you have a number of accounts that you have opened with Central Bank or CBK, but it's not indicative of where 62 million is. Chair, to me, this money cannot be traced. Because long and short, and the chief officer of finance and the one on the retention and deposit register, which I don't know, OAG, did you see the retention and deposits register in the course of your audit anywhere? Through the chair, sorry. Through the chair?
OAG?
OAG?
Thank you, Chair. The amount in this query, number 2, was based on extracts from payments that were made towards the end of the financial year, before the expiry of the defects liability period. So this amount is based on the payments, not a specific schedule prepared by the county. Thank you, Chair.
Now, members, we probably need to make progress and go into the other significant matters that have been raised there, but we need to get out of this issue of inaccuracies of the financial statements. And Governor, I think this long conversation has indicated that on the face of it, your financial statements are inaccurate. They do not provide a true and fair picture of the organization. We have looked at trade payables. We have seen that there was a significant non-disclosure of opening balances, 278 million by your own account. But you have further put it on record that you are aging, you accept that it might not be accurate due to the manual nature of your computations. You have failed to disclose staff payables. You have failed to disclose your deposits, prepayments, and retentions. You have failed to provide the bank certificates to show where the 62 million is. There is serious inaccuracies, there's serious misstatement of your financial statements. The CPAs who prepared these financial statements, CPA Makto and CPA Priska Jepchirchir, is there any reason why we should not refer you to the professional body for disciplinary action for the inaccuracies and misstatements that have been confirmed in these financial statements? I think if they're in the room, they should, before we give them the opportunity to explain themselves, before we make that conclusion. That's on the professional negligence. Of course, there'll be other conclusions on the numbers.
Chair, so as you rule, I thought you, as the two lady and gentlemen explained their position, this inconsistency has created us not clarity on variation of 278 million. The initial one, the clarity on the pending bills, that is loan outstanding, trade and payables, that the governor was trying to explain of 782,535,628 shillings, and also now 62 million that was supposed to be meant for retention and deposits, 967,159. Chair, cumulatively, this one comes close to 1 billion plus. So you might also want to rule on that issue of that variance, that the materiality and the net effect, in as much as the inaccuracies of financial statements. Chair, I yield back.
Okay, let's dispense the professional responsibility, because we sometimes want to fry the governor, who is an advocate, I believe, in good standing on financial reporting issues, which are done by experts who are members of a profession. So the two CPAs, are they in the room? CPA To and CPA Jepchirchir? Yes? You have followed the conversation, you prepared this financial statement, it contains significant inaccuracies, significant misstatements. Why should we not report you to the professional body for sanction? Why should we not make a conclusion that you're unfit to hold public office? Because that is an option that is available to us under the Public Audit Act. We do not want to condemn you unheard. That's CPA To. Yeah, proceed.
Thank you very much, Honorable Chair, through the Governor. Usually, when there is an error in the financial statement, preparation of the financial statement, the law allows a time frame for the amendment. And now we have indicated that in this year, the financial year 25-26 financial statement will make adjustment in regard to the 278 million committed at the beginning of
Misstatements and material inaccuracies.
Yes, they are material, sir.
Yeah, because ahead and sign that the financial statements present a true and fair view of the enterprise, then what you're saying cannot be of use. So if that's all you've got to say, it's okay. We will ask ISPAC to look at the matter. CPA Jepchirchir.
Thank you, Chair. In addition to what Mark has said, we've taken corrective measures to address errors that occurred in the financial year.
What has he said?
I think speak for yourself, because you don't share an ISPAC number. Everyone has their own ISPAC number.
Okay. Thank you. On the issue on retention deposits and account, we've taken, I've personally taken corrective measure to ensure that the account is well mapped. And in the current financial year ending 30th June 2026, we've been able to wire deposits as and when we requisition for projects that are due to be retained, and the auditors will be able to verify this.
So that's in mitigation, but you agree
Yes.
that there were serious misstatements and inaccuracies in the financial statements.
Sure. On retention, it was the challenge of us moving from the commercial account to the CBK account, which gave us a challenge of mapping, but we were